Now, hey everyone, Mick Lebinskas here from Climate Salad, and we are joined by a number of really good people interested in working in climate technology in the climate space. And we're speaking today to climate scientist Michael Molitor. Michael, welcome. We'd love to hear a 40-second quick backstory. You've got far too much to tell us, but just tell us a few highlights of your career in climate science. Let's jump straight into some of the curly questions.
Thanks, Mick. Thanks for having me, and thanks for organizing this. First of all, it's great to see so many people with an interest in climate tech and climate solutions. We're going to need an army of people, and we're going to need to get to about $5 trillion a year. So I'm always happy to support the development of the ecosystem. I grew up in an academic family. In my family, you get a PhD and you do a postdoc, and then you get a tenure track faculty appointment at the best university you can. So that was my story. I was part of the climate change research division at the University of California. This little oil company called BP contacted me in '98 and said, our CEO is going to commit us to a ridiculously difficult target, and we can't even count our carbon. Oh, and by the way, Krista, I'm actually a carbon global biogeochemist. So nice to see a family member in the group here. And so I joined BP on a secondment. I moved from California to London and spent 2 years from '98 to 2000 on BP's climate change team. And I built marginal abatement cost curves, trying to figure out, what would be the cost of achieving the target. Let me give you the punchline. We spent $25 million US on abatement projects. We generated 650 million in NPV savings back to the company. So that little experience hit me, like a freight train. And I realized, hang on a second, this is one of the most carbon intensive companies in the world. We achieved an aggressive target early and returned net $625 million, back to the bottom line. And so that hit me hard. I went from there to PricewaterhouseCoopers. I spent several more years in London, away from my surfboard and away from the pier in La Jolla at Scripps, where I was based, and was the global leader of PricewaterhouseCoopers climate change practice. Basically building carbon abatement cost curves, right? Most of PwC's clients were concerned, at what cost could we achieve reductions in carbon emissions? What do those options look like? And at what point does it get too expensive? I went from there to McKinsey. I was a senior advisor on climate change at McKinsey, and the timing just wasn't right. The carbon market collapsed in 2005, for those of you that were in the game. And climate change just didn't get enough traction. So I left, came back to Australia, started a company called Carbon Shift, got an academic appointment. I'm an adjunct professor in the Climate Change Research Center at the University of New South Wales, and I'm an entrepreneur. I believe the answer, and I think Mick is a proud champion of this space as well. The answer is in entrepreneurship, right? It's in innovation, right? And we have to create. Climate Salad is helping create a nucleation point for climate tech innovation in Australia. I think we're going to punch above our weight. I'll leave it there.
Thanks, Michael. And I'm going to start. You are at the intersection between science and business. What's changed? It feels like there's been a change in this space over the last 12 months. I know it wasn't purely political. What do you think has changed, and what's the good and the bad about that change?
Yeah, look, I just finished writing a piece on the challenges in climate finance, right? We've got about $100 billion chasing, climate investments of all types. That's the good news. And that's a number that's big and it's growing, and that's fantastic. The challenge is that the bulk of that money is not reducing emissions either on a magnitude or a timescale relevant to the problem. So I wake up every day and I think of this problem from the climate system's perspective, right? And the climate system, the ultimate objective is to maintain climate system stability. So a 1.5 degree target, a 2 degree target, what we're really talking about is trying to maintain the climate system within boundaries of stability that we've come to understand over the last, at least the last 100 years, if not longer. So I think one of the things that's happened is, clearly we've poked the beast to a point where it's beginning to respond in very dangerous ways. And these, by the way, all of these things, the floods in Germany and Belgium, fires in Australia, flooding in China, fires in the Pacific Northwest, the heat domes. All of these things were predicted by the models, 10, 15 years ago, right? So it's nothing new to, the climate science community. It's just that it's happening faster, and the signature is larger. I mean, those, who would have guessed 387 people were going to die, in the Pacific Northwest from heat, right? Then you have Siberian temperatures, which are ridiculous, temperatures in Finland, and around the Arctic, right? So one of the things is our interference with the climate system is now leading to pretty fast and pretty big changes that are even beyond many of the model predictions. And I think that's getting attention. On the opposite side, the point I made about climate finance, the bulk of the money isn't chasing climate solutions at scale. I mean, either reducing emissions sufficiently and quickly. So one of the things the market hasn't figured out, and I hope this group of entrepreneurs and people interested in this space, some of you may think about this. If you think about this from the climate system wants to see a huge amount of carbon reduced and quickly. The market doesn't assign any value yet to large reductions which occur soon. I'll give you an example. Carbon credits, carbon instruments, they're dated in vintages. There's no premium on early vintages, but the climate system assigns a premium. So if you can reduce a lot of emissions sooner, that's much more important than even larger emissions later, right? Because the key aspect of climate system stability is this area under the curve, right? It's the total amount of carbon in the system. It's not so much what the emissions trajectory looks like. And that's something that we only discovered in the last probably 5 years, a paper written by Meinhausen, who by the way, he's German and he's a professor of climate change at the University of Melbourne, right? So, we have in Australia one of the key people. So for me, what am I seeing? I'm seeing, on the physical climate risk side, I see that rising exponentially, and that frightens me. On the climate finance side, there's more and more money being attracted to the space, but not enough of it driving reductions, right, at scale. And I think if you'll allow me, I think the reason for that is if we want to move investment from 100 billion to 2 to 5 trillion, then these assets that we're creating, these solutions that we create, they have to be investment quality, right? The market doesn't assign any value to activities which can reduce emissions. I mean, climate bonds are a perfect example. Investors buying climate bonds are getting a good risk-adjusted return on the bond, right? And they get to tick a box in their ESG report saying they're a responsible investor, right? But I can't look at climate bonds and even figure out whether or not they're reducing emissions on a scale meaningful to the problem, right? So my view is, and there's a huge opportunity, and maybe somebody out there, maybe one of you will chase the space, is if we can get these emerging climate solutions in climate asset classes to reflect the science, I think that's what's required, right? Because if I'm a large corporate or I'm a large investor, right now, there isn't any way for me to demonstrate that my investment's actually solving the problem. The market's going to assign an enormous premium to climate solutions that can solve the problem, right? That doesn't happen yet, but we're transitioning to that quickly.
So I think that's really interesting. And definitely needs to be some kind of gamification which brings the investment earlier. But one of the things I've seen in tech most of the time is that we overestimate the short term and underestimate the long term. The issue here is we don't have the luxury of waiting 20 years for us to work this stuff out. So really keen to know your thoughts on how the science is in place, but the science around actual measurement and of especially the carbon value of soil potentially. We know there is value there. Exactly measuring it and putting it into a currency and a system, we haven't done yet. So entrepreneurs need to build on top of a platform that doesn't quite exist yet. And so how do we do the science right now while it's still forming as we go?
Yeah, well, I mean, I've got a project that's looking at the Climate Change Research Center at the University of New South Wales, looking at how we create a new asset class called carbon bonds, right? And a climate bond today, you can't demonstrate it's actually solving the problem because it's not designed to do that. But our idea is a new asset class called a carbon bond. And in a carbon bond, when the issuer is issuing releasing their IM, their investment memorandum, or their prospectus, they highlight what the carbon emissions would be in the absence of this investment, right? So the counterfactual case, and then what the reductions would look like. We measure that delta, right? And that delta gives us a slope function. And with that slope function, we can tell you whether or not you're on a trajectory somewhere between 1.5 and 2 degrees. If you are, then we give you a preliminary designation as a carbon bond, and then we monitor the use of proceeds. And as long as you follow that trajectory, you continue to be certified over the maturity of the bond. So that's a classic example. I mean, I believe, look, institutional investors, asset owners, and asset managers, for example, they have a huge problem, right? The total pool of attractive risk-adjusted return investment opportunities isn't growing as fast as the inflows into asset owners, into asset managers, right? So they're desperate for new investment grade asset classes. You know, Mick, you mentioned soil. That's a perfect example. I mean, you know, you're talking about, potentially $100 billion a year, right, in soil carbon. That's not, in my view, that's not going to happen unless investors can have confidence that that carbon is being measured and the carbon being stored is happening on a scale relative to the problem, right? So the good news is we're at $100 billion with none of that going on. Just imagine what happens when we can demonstrate that these solutions and these investments actually can lead to reductions on a scale meaningful to the problem. That's a $20 trillion opportunity. I mean, mangroves alone are $200, $300 billion a year.
Okay, so the capital's there, the entrepreneurs there. I think there is some work to do to bring the scientists into that as well. Chad's got a question. I'll open up to Chad.
Awesome, thanks for that, Mick. I apologize. I need to run off in 10, so I don't want to get my question in here, Michael. Thank you very much for joining us. And you rightly, you identified the increased awareness in climate change, a lot of activity happening. We're seeing where my particular focus on the innovation ecosystem, as we call it, it's ramping up to address these challenges. We've got dedicated hubs and accelerators and programs. My question is, as we look at like the big challenge, we talk about $1 trillion opportunities, but deep embedded systemic challenges. In your view, what can we do to best mobilize the innovation ecosystem, which historically you can look at and say, well, it's startups and entrepreneurs, we get that, but to address something such a magnitude as climate change? How do we structure the ecosystem? Almost like Mick's last point, you've got the entrepreneurs, you've got the big challenges, you've got the research, we have all of this, and particularly with an Australian focus. How do we mobilize this to do it bigger, better, faster than what we're doing currently in a bit of an organic pace?
Yeah, good question, Chad. I think the way I think about it is there are, 90%, well, heck, we have two challenges. The first challenge is we need to reduce emissions to near zero by 2050 and in half by 2030, something equivalent to that. After that, if we can achieve that by 2050, we're going to need to remove carbon from the atmosphere because there's still going to be too much carbon. And this is an inertia problem, right? So heating will continue even if we get to net zero by 2050. So if we think of it that way, the first cab off the rank, in my view, is there's a lot of great technology out there that's at commercial scale, commercially proven, right? But for a number of regulatory and market barriers, right, that can be solved, in my view, in some cases by software solutions, right? That stuff's not happening fast enough, right? So that's my first bucket. My first bucket is, every single school should have solar and batteries. That should have happened 5 years ago, right? Every pub, every home is going to have, some capacity to generate zero carbon electricity and store it and export it, right? All that technology is here today. It's cost effective, right? There's a short payback window, but there's a number of key barriers that can be solved by clever people like people on this call, right? So that's the first bucket. The second bucket is the stuff that's just coming off the next stuff coming off. I'll give you an example. There's a British company called Arrival, right? They figured out they're going to completely disrupt the electric bus and electric truck model. They have a modular, basically electric truck, electric bus assembly plant. It's modular. You put the pieces together and you can set it up, one in Brisbane, one in Sydney, one in Adelaide, one in Perth, right? And you can start cranking out these things out, right away, right? In countries like Australia, I mean, we could spend the rest of the time talking about the kind of challenges, but I have this idea of raising money into a fund and going to companies like Arrival and companies building, vertical takeoff and lift hydrogen fuel cell vehicles, like the Sky aircraft by Acolyte Technologies in Boston, and running around and investing in those companies, and at the same time getting the production distribution rights for Australia. Right? So that second bucket is the stuff that's not here, and I'm just using Australia as an example. This is true, almost worldwide. There's stuff that's not here. It's not yet commercial, but it's going to be commercial, right? And it needs help. And there are enormous opportunities to make that happen. And so that gets us to a pathway that allows us to think about reducing emissions in half by 2030 and getting to 2050. Then that last component is we're going to have to find novel ways of taking carbon out of the atmosphere and doing one of two things with it. Well, one, doing something with it that doesn't allow it to return to the atmosphere, and whether that's locking it up into a carbonate, into a structure, into a chemical structure that allows it to stay solid and not return to the atmosphere over a long period of time, or harness it to make solar fuels, those types of examples. All of that stuff, right? And of course, people like the Gates Breakthrough Energy Fund is funding that stuff. They just announced this Catalyst program. And finally, look, in terms of the money, I mean, look at Microsoft, right? Microsoft is going to be carbon negative by 2030, I think, or 2025. They're offsetting all their emissions back to 1975. I mean, we can have a conversation about whether or not we think that's important. But they recognize they have a carbon liability problem, right? This is a license to operate issue. So they have a $2 billion fund. Amazon has a $21 billion fund, right? Google has a fund, right? And so all of those, the capital is there, right? And I think the biggest opportunity for that capital in the short term is driving solutions that allow us to accelerate the technologies which exist at commercial scale today, right? That's a $1 trillion opportunity, right?
A quick one to extend on from Chad's comment there. You're a bit of a rarity in Australia that you straddle between the science and the entrepreneurship. We had some amazing people at universities, in companies, and in places like CSIRO, and we've spent the last 10 years building up an entrepreneurial ecosystem. But they don't strongly overlap like they do in Silicon Valley or in Boston or in Israel or in Waterloo or even in Berlin and parts of Europe. Where do you like? Do you think that's important, or you can have a team of developers here and you've got an entrepreneur over here, or does the science and entrepreneurship really need to start working together strongly? And how can we do that? How can we accelerate that collaboration?
Yeah, good question, Mick. So the new vice chancellor and president of Sydney University, has already spoken and said he's going to be looking for collaborations, right? And obviously, the easiest place to collaborate is with the other universities in Sydney, right? So, absolutely. I mean, one of the things that Tel Aviv and Israel do, between the people that are being trained by Unit 8200 in cyber technology in Israeli Defense Forces, plus Technion and the other universities, I mean, they tap that extremely well. I mean, I've made numerous trips to Israel and I'm just blown away. We absolutely have to do that here. I mean, think about, Martin Green and the solar engineering program at UNSW. I mean, that's phenomenal. And it's created a lot of wealth for, Chinese billionaires. But I don't think we leverage Martin Green and that program in a way that's meaningful, right? And then combining, I mean, we have 4 great universities. We have UTS, Macquarie, Sydney, and New South. and our ability to bring them together, and maybe the Evely, innovation precinct is a place to do that. But yes, we have to do that. I mean, when I was on the faculty at Berkeley, we brought together the Berkeley campus, Stanford, NASA Ames, the Lawrence Livermore National Laboratory, the Monterey Bay Aquarium, and we created an infrastructure around innovation in Earth systems, right? Across those universities, and that spawned a huge number of startups. So yeah, we've got great universities. I mean, and I'm just using Sydney as an example. I mean, Melbourne University, Monash, Curtin. I mean, I know people at Griffith University in Brisbane, they're fantastic, right? But I think we should start with Sydney. I'm gobsmacked by, what I see in Surrey Hills, right? With that's rapidly becoming an absolutely fascinating, the key elements are there, right? We need to build on that, right? Between the companies with billion-dollar valuations based in Surrey Hills and the VCs, and then Surrey Hills, you're probably equidistant from all the universities. So yeah, we need to make that happen. So Mick, just add that to your climate salad list.
Exactly, salad plus ecosystem. Yep. Will do. So Chad had to jump out again. People, please jump in or raise your hand if there's any questions for Michael. Keen to get more coverage of this. So yeah, I think the science is really key. What's your thoughts on doing things that actually reduce the amount of emissions that go out versus offsetting that kind of focus?
Yeah, so I don't really understand net zero by 2050 unless you're going to get credit for reducing emissions on the moon or someplace else, right? In other words, I mean, if everyone's at net zero, that means all the emissions are covered, right? So I don't understand where the net comes from. We're going to have to, look, and in the short term, if we're going to here's my number one issue, right? Roughly 10 times more money is being invested globally on keeping emissions high or increasing carbon emissions than decarbonization efforts in all forms. Right? If you subtract from the money that's being attracted to decarbonization, all of the things that don't reduce emissions at scale, then it looks more like 18-1. Right? If we don't reverse that perverse carbon investment ratio quickly, it doesn't really matter how fast the price of energy storage or solar or any of the other solutions that we're thinking about, it doesn't happen, right? So, you have a large number of large-lived, I mean, here's a tremendous entrepreneurial opportunity that I don't have time to chase. You have these large coal-fired power plants in Australia and around the world. They need to be shut down as quickly as possible. Now, there are challenges in terms of the owners of those, the debt holders and the equity holders, and of course, electricity they provide and all of that. So I don't mean to make light of those things. But if you think about, the White House has now put a price of more than $100 a ton. At $100 a ton, if I can monetize that, I can close a power plant and someone's going to pay me for those reductions, right? And those reductions are an order of magnitude more valuable than the current enterprise value of that plant, right? So, step one is accelerate the technologies that are here. Step two is there's a bunch of large, long-lived, high carbon emitting assets. They have to be closed. And because most of them exist in countries with, property rights and, legal systems, it's not China. You can't pick up the phone and call them and say, you'll close tomorrow. You have to figure out a way to make that work. In my view, if you monetize the emissions avoided from shutting them down early, even at half the White House social cost of carbon, right, you're making money, right? And maybe you redirect that money to an equal amount of renewable generation with storage. So that's another, I don't know if Chad's still with us, but that's another box, right? Yeah.
Jumping into Megan's question here about the role of government, and I think particularly extending on what you were saying there, if the role of government definitely there's a perception problem right now that they see it as loss of jobs and impingement on maybe their royalties and other status quos. Like, how do you see at some point, certainly specifically for Australia, that flipping, or like with the European border carbon program, they're going to have to do that anyway. But do you see that it's going to be that they have to do that now in order to get these things to happen, or it's okay if corporate and consumers lead it?
Yeah, I mean, look, I've been banging my head with the federal government for. I mean, I worked for the Federal Department of Climate Change when the carbon pollution reduction scheme. I worked on this New South Wales G-gas emissions trading scheme in 2001 and 2002. I've seen everything in the country happen, and I mean, I'll give you an example. When the Labor government, when the Red government was running the numbers on the carbon pollution reduction scheme, they came to PwC and said, "Could you model the carbon price for us?" Right, and obviously, what they want to know is if the price that emerged from the scheme was too low, then nobody would make investments in any structural changes. They just find a way to pass those costs on to their customers, and you wouldn't see the kind of material change. And then if the price is too high, then you start knocking people's teeth out, and you get political pushback, so there's a sweet spot. And we said the key number is $41 Australian a ton, right? Because at $41 a ton back then, that would have led to massive fuel switching from coal to gas. And all these intermediate players on the eastern seaboard of Australia that didn't have opportunities to monetize their gas because they weren't big enough, all of a sudden had a market, right? And the government said, PwC, here's your check, thank you very much. And they announced the price, $23. So every single scheme that I've worked for and supported, government scheme in terms of helping with the modeling, when we've given them what we thought was a key price, not one government got anywhere near that price. So look, that leads me to think about the following, right? We've got 9 years now to reduce the emissions in half, right? My personal view is I can't afford to wait for government to turn on this issue, right? Now, are they going to turn on their own? Is there going to be a change of government? Are they going to be forced to do this? I don't think any of those things are going to play out on a timescale meaningful to this. So what's the solution, right? Well, I mean, government acts as a trusted broker, right? In my view, blockchain, I mean, for example, an emissions trading scheme, you don't need government anymore, right? A startup should create a blockchain-enabled emissions trading scheme, right? And watch how fast you get Fortescue, Santos, BHP, Qantas on that scheme, because they keep knocking on the government's door and saying, we need a regulated price, right? We need a carbon price to emerge by regulation, so we have a stable investment climate, and we can address institutional investors' needs for us, to reduce our emissions and be responsible, right? In the absence of that, it's very, very hard. You don't need government anymore to do that, right? You could use blockchain, and you could create an emissions trading scheme, right? Allow companies to set their own targets on the scheme, but they're all transparent, and then allow them to trade between themselves, right? So, some of the emerging technologies that we've seen explode in the last decade are the kinds of things that create the trust and the transparency that are normally provided by governments. Let's use those, right?
Interesting. So are you, briefly on this one, are you, in terms of COP26, do you think it's going to be more political posturing, or we're going to come out with something hard, meaningful, and actionable?
Well, I don't know how many of you saw the news, but the G20 meeting in Venice just a few days ago, it turned into a shitstorm between, the EU and Japan and the United States on one side, and China, Russia, India, and Brazil on the other. A huge pushback on pushing targets forward, right? Why? Because the countries that are pushing back think that the countries that are pushing for more aggressive targets are going to leverage that to outcompete them, right? And they have a point, right? So already we're seeing a fracturing across the G20, right? We're seeing a fracturing.
Not optimistic.
So look, I mean, at the end of the day, I believe the majority of the solution is going to have to come from the private sector. And the majority of that's going to come through innovation, through startups, right? I mean, they may get bought by big boys, big girls, and then scale that way, but that's going to happen. So for me, the reason why I love seeing what's happening with Climate Salad and the rest of the ecosystem here is the solution is going to emerge, the key solution is going to emerge from here, right? And so look, after having my front teeth bashed out by a cricket bat too many times, I'm not spending any time, talking to government anymore. I mean,
metaphorically, I hope, yes.
Yeah.
So that's a good question there on to Kathy's comment around innovation within Australia and collaboration versus between countries. And this goes to some of the work I know Patrick's joined us that Whole and IQ is doing about regional sectors, sectoral strength. But what is your sense of entrepreneurship often happens in tight cities where they have density and connection, but these problems they're solving are very global and there are a lot of regional differences. Where do you see the tension points between local innovation and global collaboration?
Yeah, another good question. So when Mark Carney, Governor of Bank of England and Chairman of FSB, made his speech in 2015 to Lloyd's of London and said, climate change is now the biggest source of systemic risk to capital markets. That's the most important thing that's happened to me in my climate change career, right? So McKinsey Global Institute in Washington then said, and estimated that the total amount of unpriced climate risk sitting across capital markets is north of $50 trillion, okay? So how do you parcel that, in terms of thinking about that? So I then took that number and applied it to the ASX 300, and it's about $390 billion, right? So, Australia is just the right size, in my view, and it's an ideal market to test a global value proposition, right? If you can scale your solution in Australia, with our investors, at 25 million or 27 million people, or how many we have, then I think this is the perfect market. I mean, as we know, this is where Tesla, tests products. When Powerwall was tested here first, right? A lot of companies test new products here in Australia. So yes, I think, if you're part of a startup, you're thinking about a startup, Australia is a great place for a number of reasons. But if you can get scale in Australia, there should be no impediment to global scale. So build a solution that's scalable at Australia, right? and then you'll be in a strong position. I mean, for me, I have a number, right? My number is 1 billion metric tons of carbon dioxide equivalent per year, right? I want to be part of either the companies that I start or the companies that I advise, right? Collectively, I want us to be able to reduce 1 billion tons per year, every year, that aren't currently being reduced, right? So an additional billion tons. If you wake up and you think about those kinds of numbers, then you're probably on the right track.
Kathy's got another good extension point in terms of all of the world of the many parts of climate technology. Let's go with the one. Like, what is the one area of strength you think we could be a world leader in? I get that we're a good test case as well, that every entrepreneur should follow their own passion, but in the breadth of the whole space, what could Australia be the natural owner of?
Energy storage and applications of energy storage, right?
Okay.
No question.
And how are we going in that?
Sorry?
How are we doing? I know that we've got Sakona batteries. I know we've got some good hydrogen, and certainly the federal government's going long and hard on hydrogen, but and that's an energy source. And we've got some batteries, but where do you think we are in that journey to be a world leader in energy storage?
Yeah. So, key question. I was lucky enough, Josh Frydenberg, when he was the Energy and Environment Minister, took me to Israel on a Australian government delegation, right, to look at energy storage and other, renewable energy solutions. And I said to Josh, look, the energy transition is already starting in Australia. We have the highest penetration of rooftop solar. The New South Wales government is going to announce, and we're going to move towards electrifying all the public transport. So that's already happening. The key nucleation asset or ecosystem that you need to make that happen is energy storage, right? So Peter Carlson is the founder and CEO of Northvolt. Northvolt is a Swedish company. They're building a gigafactory. They're about to open a gigafactory in Sweden. They're building another gigafactory for Volkswagen in Germany, and they're collaborating on projects around the world. We had Peter coming to Australia and we were about to sign a blueprint collaboration to replicate the Northvolt Gigafactory in Australia. When I first talked to Peter about this idea, I said, Peter, you've got a PowerPoint presentation that shows we need to basically be breaking ground on a new Gigafactory every week for the next 10 years to meet demand, right? So I said, I believe that. So I said, why wouldn't you put one in Australia? And he sort of shook his head. And I said, Peter, let me remind you of a few things. We have 42% of the world's lithium market. Chile is the next with 12, okay? So we produce most of the world's lithium, which, by the way, we're just stupid because we just let the Chinese mine most of it, upgrade it to lithium hydroxide, and let it get exported to make batteries elsewhere. We have all the basic raw materials in Australia. We're one of the only countries, maybe the only country that has everything. Zinc, graphite, absolutely everything is here, right? Cobalt, to support this EV transition. We have $3 trillion under management in our superannuation, so we're sitting on, and that's growing like a house on fire, right? So surfeit of capital. We have world-class universities, and we have thousands of people who lost their jobs when we shut down all of automotive, right? Over like the last decade. So Australia is, in my view, if Bill Gates calls me tomorrow and says, Molitor, here's $1 billion, right? Invest it. I'd say to him, and you can invest it anywhere, just give me a solid financial return and make a difference to the problem. I'd say, I'm going to build a gigafactory in Australia, right? Build a gigafactory. If we can, there's 2 gigafactories being built. I know both of them, and one is better than the other, but neither one of them is happening on a scale meaningful to our ability to create competitive advantage. If we get a gigafactory, or maybe even a terafactory, that can create that level of annual storage capacity, it will create a center point of an ecosystem that will include, building our own electric motors, right? And then if we power all of that with solar, I mean, what's not happening fast enough is we can produce more cheap, zero carbon electricity than any other country in the world, right? So, Sun Cable, exporting it to somebody else so they can make stuff with it, in my view, is a really stupid idea. My view is we make all that green electricity here and we make stuff from it. The most important starting point is we've got to get a giga/terafactory up in Australia, right? And if you think about the innovation opportunities and entrepreneurship opportunities, once we're producing battery cells and battery modules in Australia, just imagine, I mean, there's going to be a company that's going to take those, right, and drop them in every home, drop them in every school, drop them in every pub, right? I mean, there's lowbrow and highbrow opportunities, right? Every home is going to have storage. That's a no-brainer. The economics are justified today, right? You should be able to drop a battery. You should be able to pay to put a battery in somebody's house and then sell the power out to them and to others. So anyway, I think energy storage, is a place where we're going to punch, where we can, if we just start, bringing our amazing resources and pointing them all in the right direction.
Yeah, it's a really good message. And I think what you're saying is we've got a lot of the components we need. We need to actually invest a bit more, go a bit harder, go a bit broader, and yeah, we've also got to do more in the value chain rather than just sell the commodity. So that's a key one. A bit of change, slight change of direction, but Ben Reid's got a question about making sure that we don't just do the numbers. I think, as you said, there's no point just focusing on offsetting. You've actually got to do some solutions which reduce the emissions and take some out of the sky. But a big part of it is actually increasing our relationship and understanding a mindset towards the environment itself. And Australia maybe has another competitive advantage in our connection to nature. And do you think that's a key, or is that a nice to have? And we've just got to focus on getting the energy in the business, or is nature still playing a role?
Yeah, interesting question, and it's one that I've been pondering with a startup that I'm involved with, right? So I think, and I made my point about, if you scale your solution here, in Australia, you can go global. I think everyone who has a cell phone and a bank account is going to have a carbon account. Everybody on this call, you're going to have a carbon account. You're going to have a personal carbon account, right? And the reason you're going to have a personal carbon account is either your employer or your bank or your insurance company, someone is either going to require it or incentivize you to do it. And the reason why you're going to do it is, one is you're going to be getting money back, unless you're really, really horrific with your emissions. You're going to be making money with your carbon account, and probably more than you're making on deposits with your cash account. But more importantly, we need to get everybody on the planet as part of the solution. And most people that I speak to, they feel overwhelmed by climate change, right? And they know to some extent they're part of the problem, but no one is offering them a solution to be part of, offering them an opportunity to be part of the solution, right? So I think, great startups, in my view, start with great insights, right? The founders have insights and they see something that most of the rest of the market doesn't see, right? And so, the insight that my partner and I had is, I think everyone's going to have a carbon account, right? And I think, getting back to the point about Australians and nature and the staggering nature and beauty that we have in this country, again, this is a great place to start that, right? I mean, create an opportunity for people to feel like they're not part of the problem, they're part of the solution, and then reward them for doing so.
And I think, going on from Ben's question, how do we actually use the technology and the numbers and those components to get people back into nature? Because I think it's a loss of the appreciation of global nature, and I think that's hard to see, right? Is that how does my one coffee cup actually affect nature? Like it's just very it's hard to see that I throw it away and it's gone. Yeah. But that's because actually, if I actually had to carry it and throw it in the bush, I'd probably think twice about it. So, your sense, being a scientist and someone so close to it for so long, how do we get that carbon account and actually get people to actually put the phone down occasionally and go for a walk in the bush?
Yeah, you're right. I mean, half of this challenge is a mindset change and giving people the tools. I've been talking consistently about technology and opportunities to reduce emissions and ultimately extract carbon from the atmosphere. But let's be clear, returning a huge portion of the surface of this planet back to natural ecosystems and restoring and rehabilitating natural ecosystems is an absolutely fundamental condition for success, right? And it's also a staggering opportunity. I mean, just preserving and conserving mangroves, right, is $100 billion opportunity. Just mangroves, right? So think about all the other biomes and ecosystems. So, we don't have yet the ability to, well, there's two things. One is individuals, and the other one is things like capital markets. On the capital market side, we're going to need the kinds of investment quality asset classes that allow money to move in that space. But on the personal side, I mean, we're working with a company in Sweden called Deconomy. For the last 7 years, they've been collecting carbon conversion data, and they now have an app that they've teamed up with MasterCard, and it's a carbon credit card. It basically measures the carbon intensity of everything you buy: cup of coffee, newspaper, train ticket, right? Dinner, delivered pizza, a new car. I mean, jeans, right? New pair of jeans, everything, right? And it uses AI to get better and better. So my starting point is if we can give people the tools to just have the right framework and understanding about the joint issues of climate change and returning natural ecosystems, I think people are innovative. I think they want to do the right thing. They have to have the tools to do that. I mean, I'm finishing a book. It's a small book, 150 pages. It creates a simple framework for people to understand climate. Because when you see a story in the paper about the heat domes in the Pacific Northwest, and a scientist saying, those heat domes unlikely to have occurred in the absence of human modification of the climate system, climate change, or you read the EU's about to put a carbon border adjustment mechanism in place. Most people are overwhelmed by that. If people have a framework for understanding how all those pieces fit together, one, I think they're going to have more interest, and two, they're going to have more interest in understanding the connection between their personal lives and this, right? But I think, we're going to move towards, well, the entrepreneurial opportunity to attack this problem, right? To create maybe either software platforms, right, that allow people to have a more direct connection between the decisions they make every day and the natural, the natural ecosystems challenge and the linked climate change challenge. That's a huge entrepreneurship opportunity. That's not really my strength, although I realize just how important that is.
Yeah, amazing. Thank you, Mike. I really appreciate that. A great call to action as well. Just one thing as well, oftentimes people starting companies need to find a good co-founder, and it's good to have someone high in your team who has the science background. Finding entrepreneurs in city startups, Facebook groups, and co-working spaces is a little bit easier these days, at least in cafes when Australia's at least open. But what are some ways that entrepreneurs can connect with scientists in Australia specifically?
Yeah, I mean, well, first of all, let me go to the first part of your proposition. And if you're thinking about, your startup or a new startup idea, and it's in the climate space, I think it's important that you're able to demonstrate that your solution, when it scales, right, actually addresses the problem. And so you'll need to be able to demonstrate that in a robust way. And that's either because you've got a person on your core team who has that skill set, or you have a relationship with somebody or some organization that has that skill set. So Climate Analytics is a company that was spun out of the Potsdam Climate Institute in Germany. Potsdam Climate Institute is one of probably the top 5 climate research centers in the world. Bill Hare, who's Australian and lives in Perth, is the CEO of that company. The team is based in Berlin, right? So Climate Analytics is a company created by PIK, that's the German spelling for Potsdam Climate Institute, to do exactly this, right? So I think one of the things I'm trying to do is figure out how to do that with a climate change research center at the University of New South Wales. But they're increasingly getting calls from startups and investors asking for climate science help, which is a great sign. But we don't have a structured process for doing that. But I think we need it.
Yeah. Okay. Yeah, I think it's something that a number of people on this call who have been great at building the ecosystem need to step in and help out with as an opportunity. So, Michael, thank you very much. We'll leave it there. Well, we do have the next on August 11. We have another chat coming up. It's a debate between Tim Parsons and Alex Logan about natural capital and nature-based solutions. So I'll send that around to everyone and follow up. But huge thanks to Michael. Thanks everyone for joining, and thanks everyone's hard work in working in climate change and climate tech. I'll share this up on Climate Salad, and hopefully we'll get more of this activity happening. Thanks everybody.
Thank you everyone.